So you've been wanting to research companies, but you don't necessarily have the time to do it yourself, or you don't know how to do it yourself. In this series of videos, I'm going to be going step by step through my entire process from beginning to end on how I find companies, what I look for when I do my initial research on the companies, if they pass my initial research, how do I value and evaluate them after reading their financial statement. I will go step by step, including valuations when we get to that point, in how to evaluate companies. My name is Jason Rivera, and welcome to Value Investing Journey Case Studies.
Hey, Jason here. In this case study video, we're going to finish up talking about the ASXFY's 2018 annual report. Like the first part, again, if you watch the first video on the 2018 annual report, the second time you go through a company, the least amount, it's going to take less time. So that was definitely the case with this company. What I look for when I go through the company the first time is to get all the pertinent information, get a good idea of what the company does, check on its economics, see if it has any competitive advantages, look at what it says in the footnotes and how it words things to see if it's doing anything I don't like, those kind of things. When I read a subsequent annual report, what I look for is updated information, obviously, and major differences in how they operate, plans, strategy, things like that. So in the first part of this series, or in the first part of going over ASXFY's first 50 pages of their 100-page 2018 annual report, not much information changed. Just got updated information, all that kind of stuff. Or updated financial information, that kind of stuff. For the most part, I didn't see any red flags. Actually, I don't remember seeing any red flags. And nothing of major note happened. I just put the updated financial information in my notes and read the financials and went from there. Same thing with the second 50 pages. I'm not even going to waste your time showing me going through the second 50 pages because, it was, again, all I did was I read the information, didn't see any major red flags, didn't see any major changes or anything of major concern, major note, either positively or negatively. Got updated financial information, and that's pretty much it. So now that we're done with the 2018 financial report, where do we stand? We've read one annual report. So far up to this point in the case study, we've done preliminary analysis. Full preliminary analysis, found out they looked like a great company, which led to what we're doing now in the annual reports, both the annual reports, the 2017, 2018 annual reports. I've seen things that have annoyed me that I don't necessarily agree with in these financial statements. Nothing to disqualify the company based on my ultra strict criteria. So, company still looks fantastic from a margin perspective, cash flow perspective, balance sheet perspective, pretty much every perspective I look at. Management looks all right. They have competitive advantages. Everything looks great at this point. So what happens next after a company gets past my criteria or past the level of me looking at their annual reports? Their most recent annual report also was their most recent quarterly report, so we don't have to look at that, which I normally do. Their most recent annual report also has their proxy report information, how much they pay their executives, how they pay them, major shareholders, major inside shareholders, all that kind of stuff. That's already in there, so we've already gone through all that. So what I do next at this stage is I look on Google, and this is what we're going to cover next week. I look on Google for any major news that's happened since the annual report came out, which again, as of this recording, it came out 2 or 3 weeks ago, so there shouldn't be hardly any new information if there is any. Going to look at press releases, doing the same thing, company presentations, those kind of things. So we're going to be talking about that next week in this case study video. So what happens after that? If a company passes that stage, then we get to the valuation of the fun stuff. I don't value a company until I get to this stage, because I don't want this very advanced stage, because I don't want to be biased by a company looking potentially undervalued or potentially overvalued. I honestly don't even know what the share price is right now. I know it's risen since we started this case study. When their most recent financial statement came out, their share price rose, I think, 25-30%. But I have no idea what the share price even is at. So I do that to get rid of the share price on my mind, so that I don't let that bias me, and I don't let the valuation either bias me negatively or positively as I'm going through the annual report or the other financial statements or presentations or anything of that kind. I do this, again, to take emotion out of everything, to rely on my analysis and my data and my calculations only, and to see in my unbiased kind of view, once we get to the valuation stage, if the company is going to be undervalued enough for me to want to buy. So we're 2 stages away from that, and I can almost guarantee, since the most recent financial report just came out, that we're going to get to that stage. But until then, next week we're going to talk about, go over Google News, company presentations, webcasts, whatever they've released in the last 2 or 3 weeks since they released their most recent annual report. Then the week after, we're going to get the valuations. So if you have any questions, comments, concerns about anything about the case study at this point, let me know in the comments below. Sorry about that. My damn dog was freaking out. Couldn't wait a couple more seconds. So what we're going to do is, next week we're going to go over the my process for looking at Google press releases, webcasts, company presentations, all that kind of stuff. Then the week after, we're going to value the company, and then we'll just go from there. Again, this is taking longer because I'm playing it out on a blog and website. But this is the exact process I use when I evaluate any company. I do not value a company until we get to this stage, because I don't want it to bias me in any way, like I just talked about. So if you have any questions, comments, concerns, let me know in the comments below. If you want to see the financial notes updated to this part, I believe we're at part 7. They are below, whether you're watching on YouTube or on the blog. Make sure to check out our other series, case study series, what we're doing here, our free training series, our Throwback Thursday series, our Value Investing in Your Car episode series, and our My Thoughts series, where I have financial education and investing education. Make sure to check those out. If you're watching on YouTube, make sure to like, share, subscribe, and comment below. I'm very active in the comments, respond to all comments myself. If you do like the video and our other videos, make sure to subscribe and hit the bell so you're notified anytime I release a new video. And as of this video, we are up above 370 total videos. And we're releasing new videos every day. So make sure to check out our videos. And until next time, have a great day.